In the world of global finance, few voices carry as much weight or influence as Andrew Bailey, the Governor of the Bank of England. His words are closely watched by markets, governments, and financial experts around the world, as they often signal the direction of the UK's economic policy and stability. As the UK's central banker, Bailey's decisions have a profound impact on everything from mortgage rates and inflation to the overall health of the nation's economy. His role is not just about setting interest rates, but about maintaining confidence in the financial system itself. On January 13, 2026, Bailey delivered a speech that surprised many. Instead of focusing on the usual topics of monetary policy or inflation, he addressed a deeper, more pressing threat: the rise of populism and its growing attack on public trust in financial institutions. He warned that a coordinated campaign is underway to discredit financial experts and global agencies, undermining the very institutions that are designed to safeguard our economic well-being. This, he argued, is not just a political issue, but a direct threat to the stability of the financial system. Bailey's message was clear and urgent. If we lose trust in these experts and institutions, we risk navigating through economic storms without a reliable compass, making it far more difficult to weather future crises. This is, at its core, a battle between evidence-based policy and political narratives that seek short-term popularity, often at the expense of long-term economic stability and prosperity. Institutions like the Bank of England and the International Monetary Fund rely on rigorous data, analysis, and decades of expertise to guide their decisions and protect the public interest. In contrast, populist movements often cast doubt, spread misinformation, and assign blame, eroding the public's faith in the very systems that keep economies functioning. Bailey's speech was more than just a warning. It was a call to action to defend the integrity and independence of our financial institutions, because ultimately, our shared economic future depends on their strength and credibility.
Bailey's core message: financial leaders must actively push back against populist attempts to discredit them.
He warned that portraying experts as out of touch or self-serving is a dangerous form of disinformation that threatens economic stability. Bailey called for a proactive defense, explaining clearly what these institutions do and why their independence matters.
The public needs to understand that central banks and agencies like the IMF exist to provide non-political, long-term guidance.
If people grasp how these institutions protect their financial security, they'll be less vulnerable to populist rhetoric. Bailey urged his peers to step into the public square, fight for trust, and make the case for expertise. The alternative economic decisions driven by politics, not evidence, history shows that leads to hardship.
Populist leaders often rely on a simple but powerful tactic: crafting an us versus them narrative. They paint financial experts and institutions as distant, unfeeling elites, supposedly working against the interests of ordinary people. This narrative is designed to stir up resentment and suspicion, making it seem as if the system is rigged by those in power.
This approach taps into real anxieties, especially during economic downturns or periods of uncertainty. When people are struggling to pay bills or find work, it becomes easy to blame faceless institutions for complex problems. Populists amplify these fears, offering simple answers to complicated issues. By scapegoating central banks and regulatory agencies, populist leaders twist necessary policies into supposed attacks on the public. They turn legitimate efforts to stabilize the economy into evidence of a conspiracy against regular citizens.
They go further, working to discredit expertise itself. Facts and analysis are dismissed as mere opinion, while experts are framed as conspirators with hidden agendas. This erodes the public's ability to distinguish between evidence and rhetoric.
The ultimate goal: to consolidate power by weakening the independent institutions that provide oversight and accountability. Without these checks, leaders can act with far less scrutiny.
If the public stops trusting expert warnings, politicians are free to make reckless promises and pursue risky policies without challenge. The guardrails of democracy and sound governance begin to erode.
In this vacuum, sound management is replaced by political calculation and short-term thinking, as leaders prioritize their own power over the nation's well-being. The result? Long-term pain and instability for the very people populists claim to protect: families, workers, and small businesses who depend on a stable economy. The stakes are high. Our economic stability and future prosperity are at risk when political power goes unchecked and trust in expertise is lost.
Organizations like the IMF and World Bank act as impartial referees and early warning systems for the global economy. They monitor trends, identify vulnerabilities, and help countries navigate complex financial landscapes, ensuring that economies stay on track and avoid major pitfalls.
Their teams analyze countries' finances, spot risks, and offer policy advice, like a doctor's checkup for economies. They look for warning signs, such as rising debt or unstable markets, and recommend solutions before problems spiral out of control. This proactive approach helps countries build resilience and maintain steady growth.
When crisis hits, the IMF can provide emergency loans, but with conditions to fix underlying problems. These loans are not just quick fixes. They come with requirements for reforms that address the root causes of instability, such as improving governance or strengthening financial institutions.
These reforms can be tough, but they're designed to restore stability and growth. By encouraging countries to make difficult but necessary changes, international agencies help lay the groundwork for long-term prosperity and prevent future crises.
Beyond crisis response, these agencies foster global cooperation, share research, and train officials in developing countries. They organize workshops, provide technical assistance, and help governments adopt best practices, making sure that knowledge and expertise are shared worldwide.
They help set the global rules that keep financial systems safe. By bringing together nations, they create standards and agreements that promote transparency, accountability, and fair play in international finance.
In a connected world, their work prevents local crises from becoming global disasters. By acting quickly and coordinating responses, they help contain problems before they spread, protecting economies everywhere.
Bailey emphasized that these agencies are guardians of stability, not faceless bureaucrats. Their expertise and dedication are crucial in maintaining trust and confidence in the global financial system. Their impartial perspective is essential for a healthy global economy, ensuring that decisions are made for the benefit of all, not just a select few.
Bailey noted that international agencies often deliver uncomfortable truths, making them targets for politicians.
When the IMF criticizes a government's policies, it's doing its job, but politicians may see it as a threat.
The common response? Attack the messenger instead of debating the facts.
For example, governments may accuse the IMF of bias or interference, shifting focus from risky policies to the critics' motives.
This tactic creates an echo chamber, where only agreeable voices are heard and inconvenient truths are ignored.
If expert advice is always dismissed, policymaking drifts from reality, inviting disaster. Bailey's plea: defend the space for objective debate or risk losing the ability to make tough, necessary decisions.
Imagine a world where trust in financial experts collapses. This isn't theory, it's a recipe for economic disaster.
When trust vanishes, uncertainty rises, and uncertainty poisons investment, spending, and growth.
Businesses delay projects, consumers cut back, and investors flee, triggering a downward spiral.
Market confidence drives currency value, interest rates, and stock prices. Lose it, and borrowing costs soar, forcing painful cuts to public services.
For households, higher rates mean pricier mortgages and loans. Inflation expectations can spiral out of control.
In extreme cases, trust collapses entirely, leading to hyperinflation, banking crises, or debt defaults.
The result? Savings wiped out, unemployment surges, and economies grind to a halt. Bailey's warning: trust isn't abstract, it's the foundation of prosperity.
Bailey also challenged the populist push for protectionism, arguing that closing off trade is self-defeating.
In today's interconnected world, trade brings efficiency, lower prices, and more choices for consumers.
Everyday products, like smartphones and coffee, depend on global supply chains.
Isolation means higher prices, less choice, and stagnation.
Trade drives innovation and growth by forcing companies to compete and improve.
Open markets also spread new technologies and ideas, fueling progress.
Bailey's message: prosperity depends on global cooperation, not economic walls. Working together within a rules-based system is the surest path to shared growth.
Bailey co-signed a statement with other central bankers supporting Jerome Powell, showing solidarity against political attacks.
This wasn't just courtesy. It was a stand for the independence of institutions that safeguard our economies.
United, central banks send a message: an attack on one is an attack on all.
Their credibility depends on freedom from political interference.
Solidarity strengthens their ability to resist pressure and maintain stability.
If these institutions are weakened, the global system becomes more fragile. Bailey's actions reinforce the need for experts to stand together against coordinated political threats.
Bailey's intervention is a reminder: trust in financial experts is the bedrock of prosperity. Politically motivated attacks on central banks and agencies threaten everyone's future. These institutions are our early warning systems, objective, data-driven, and essential. Undermining them leads to volatility, higher costs, and crises that hurt the most vulnerable. Bailey's plea for open trade and global cooperation is a defense of the system that has lifted billions. The choice: embrace evidence and expertise, or risk chaos and decline. Protecting our financial institutions is the best investment we can make for a stable, prosperous future.